Welcome back to another stock market open live stream. Take a look at Bitcoin if you have not yet seen it. Yesterday, it felt like around midnight or so, it seemed like Bitcoin took this sort of 1 hour rally and just shot really straight up to over at one point in the morning $72,291. Now, slightly below 72,000 now, but what a lot of folks are looking at is what's going on in the pre-market and the stock market to see, hey, can we push a rally in the stock market just like Bitcoin is moving, or is there a chance that we're going to see Bitcoin pull back with the stock market and a worsening pullback, a continuation potentially of Friday? We'll see. Right now, we've got the Qs down about 50 basis points. ARM is down about 3% in the pre-market. Tesla's actually slightly up in the pre-market, though we'll see how robust that is. The pre-market can be really funny and easily manipulated just because there's so little trading going on. Pre-market super micro sitting at 3.95% to the downside, with ARM also there at about 3.28. CrowdStrike down about 2.4. Costco down another 1.1% after its 7.6% day on Friday when it reported, right after reporting earnings. Marvell Technology was down 11% Friday, down about 1% after reporting earnings. On the side of green things in the pre-market, MicroStrategy up with Bitcoin, obviously. You've got volume too low. I got a lot of folks talking about volume here. Hold on a sec. Darn. There we go. Is that better? Hopefully a lot better. I'm sure it is. Sorry about that. Sorry for the first 2 minutes. That's unfortunate. Oh well. It will be fixed. Anyway, here you go. So MicroStrategy sitting up 9.5, obviously, as Bitcoin hit 72,000. You've got your Bitcoin relateds up. Now, 72,000 for Bitcoin, I want to pay attention to how most of this happened here in the pre-market. So take a look at the timing here. If we go to 30-minute intervals, you can look at this closely right about here. It was almost perfect in this 3:30 a.m. hour, so about 12:30 California time, 3:30 Eastern time. All of a sudden, you got this boost. And it didn't really take much for it to boost. It seems like you've got about 2 hours here of pushing in Bitcoin. So it's almost like there was a 2-hour period here. And look at the timing here. 3 a.m., so midnight in California, 3 a.m. East Coast. All of a sudden, you just get this push that lasts about 2 hours. Then we settle out and kind of maybe let market forces move on their own. But there you go. Bitcoin 72,000, and was really driven by movements this morning. Now, in the pre-market, in the stock market, usually opens up right here at about 4 a.m. Eastern or 1 a.m. on the other side. So take a peek here. If we look at the pre-market open, and actually see pre-market open here, the Qs initially rode up to 439, but then rode down, up, down, up. I mean, look at this volatility in pre-market here, and kind of bleeding down a bit right now. So I'm very curious to see how today will actually open, mostly because there's so much of this this volatility that we've seen in pre-market on the Qs, but that you haven't really seen on Bitcoin, which feels a little abnormal. It seems like usually when we see Bitcoin rally, we do also see green in the stock market, especially as we're leading into CPI expectations this week. If you haven't been looking at the calendar, remember that tomorrow is CPI day already. So that means really any trading today is being done pre-CPI. And pre-CPI trading is often light because I feel like it's, at least personally, it's hard for people to sort of build positions before a CPI report. But it is possible. I mean, if you think if you think CPI is going to come in soft this month, because maybe you saw January's numbers and thought, oh, those are going to be high on a one-off. February will be a lot better. Well, this is your justification moment here. This is the moment where you've got to get that data to come out and support that thesis. So we'll see. So tomorrow we'll have CPI at 5:30 a.m. and we've got a month-over-month expectation of 0.4 versus the 0.3 we had prior. Core month-over-month 0.3 versus the 0.4 prior. Then, it looks like after that we're going to have, so we'll have our Thursday data for CPI. Then we'll have retail sales, tomorrow, Tuesday data CPI. Retail sales Thursday along with PPI and jobless claims. And then on Friday we'll have import-export prices. So really, this will be CPI and PPI week. So think Tuesday, Thursday for catalyst this week. That'll be the entertainment. So let's take a look at how coin is moving. I'm guessing with a 72,000 Bitcoin, coin should be doing very well. Yeah, look at that. Holy smokes. What a roller coaster this stock has been on. Zoom on out to the week chart. But look at that violent recovery. I mean, Coinbase, since, frankly, the beginning of February, has doubled. Coinbase has doubled since the beginning of February. Right after the ETF approvals, we got to about 180, fell down to 118, and just skyrocketed since then. And as we know, Coinbase does obviously move as a Bitcoin proxy. Bitcoin up, Coinbase up. You're also getting a lot of altcoins substantially moving, and there's some pretty wild ones you could see out there. We were joking this weekend. There's, I guess, this one called Joe Biden. I gotta look this thing up. Let's see here. There we go. Joe Biden. Goebode. See, but if you type it into Google, it'll actually correct to Joe Biden, so you have to change it to Joe Biden, and it's wild. Some of these brand new coins that come out, or tokens, I guess I should say, and watching some of their price action and their volatility. Of course, they're almost always in the penny ranges, but some of these come out here, just a few days ago. I mean, this one's only about 5 days old here. Pretty wild. But anyway, so jump on over to some of these larger alts. You've got obviously, Bitcoin and Ethereum, not necessarily as your alts here, but Bitcoin at up 10% for your 7-day, 15 on Ethereum. But looking at Solana, also up 12%. XRP this week, 4% down. Cardano, 5% down. Doge, Sheeb, 10 and 30%. Polkadot, 6.7%. Wild. Okay, so let's grab the latest on the morning news. So yeah, it looks like a lot of talk here about excitement over inflation tomorrow. That'll be the big day. You've also got the Fed's going to be pretty quiet here, mostly because you're in a blackout period, and when the Fed's in the blackout period, there's little entertainment of sort of new news from the Fed. That's very normal. The blackout period is coming up to the meeting that we are expecting on the 20th. That's the Federal Reserve FOMC meeting on the 20th. Obviously, we'll be covering that. Let's see here. Where was it going? I was going to mention that Tesla was supposed to open its Berlin factory this morning, but that got pushed back to the end of this week. So, not ideal. Sort of adds to some of the pain that you're seeing over at Tesla. This is, It's also we've also had quite a few shutdowns for Berlin. If you think about it, we shut down at the end of December for a moment. We shut down at the end of January for a bit. Then we have this climate change shutdown. So you've got quite a few numbers of shutdowns that you've had over at the Berlin Giga Berlin factory. So again, we're looking now at, I believe it is, the 29th was because of the Red Sea. Some folks have been wondering about that. That was because of the Red Sea. Okay, so I thought I wrote down the exact shutdown dates yesterday so I could be prepped for that this morning. But I guess I missed hitting save on that shutdown dates. But it was end of December 2023, end of January due to Red Sea, now March 5 for Super Tuesday through March, I want to say that is, okay, it's the 15th, March 15th, a bit longer than expected due to the climate attack. There we go. Okay, good. So now, let's see. This morning it does look like there's also, got a little bit of a note here. Tesla spokesperson comments an emailed statement. Tesla says not clear when full production will resume. Okay. They are updating that they are actually now expecting to start getting power back today. Not sure if that'll be partial power or full power, because there was talk that this was going to get delayed until Friday. Okay, so that's good news. That could be why you're seeing some of the green show up over at Tesla. I think folks are a little worried about the situation in Berlin. And so you are seeing about 46 basis points of green. Yeah, there we go. Okay. All right, so however, let's see. However, limited production could resume March 11th. Okay, cool. There we go. All right, so now that's Tesla. Next, we have Tyson is hiring New York immigrants for jobs nobody else wants. Oh, see, that's interesting. For politicians in Washington and New York City, an unprecedented system of asylum seekers presents an intractable problem with no easy answers. For companies like Tyson Foods, struggling to fill unpleasant jobs with an unemployment rate of 3.9%, this new population is an alluring opportunity. Oh, that's interesting. Refugee jobs. They're joining nonprofits to take refugee jobs. We'd like to employ another 42,000 if we could find them. Wow. Collecting the asylum seekers. I mean, that makes sense. You know, I mean, who wants to work in slaughtering pigs and cows, you know? That's it's either depressing or gross or both. So that sucks. But anyway, hey, if you can't get a job anywhere else, as you kind of integrate, I guess that's an option. All right, let's see. Let's go to. There we go. Okay, very well. So next up, let's take a listen in over here. See what they're yapping about, if anything decent at all.
With downside protection. The traders love the vol. You know, we've got 100 vol asset here, and they just like the vol. So we're unique because you can't really trade options on the ETFs, and an ETF isn't going to issue a convertible bond with upside to Bitcoin but downside protection.
So Michael, I try to understand the mathematics, and I know people like you went to MIT, and it just seems maybe it's more understandable for you or Andreessen or Peter Thiel or whatever. At 17, down from 68, and you know your leverage and everything else, did you ever wake up in the middle of the night and have any doubt whatsoever. That's my one question, because I was thinking about you at 17,000, and now I look at it now, and I just can't believe what the market cap of your company is based on it now. I guess, and the other thing is, when it halves, should we, if we look at it on stock to flow, do we have to just double what the potential price is based on, if you use that metric? Is that a valid metric to use? And after the halving, shouldn't it be 140,000 immediately if it's worth 72 now?
Two good questions, and thanks for asking me. First, with regard to Bitcoin, no, there's no doubt in my mind Bitcoin was a better investment at 17,000 than it was at 65,000. I take the Warren Buffett view on this. Bitcoin's a superior investment to gold, equity, bonds, and real estate because it's digital. You can trade it 1 million times faster than conventional assets using a computer. It's available. Most other assets only trade less than 20% of the time. Bitcoin's trading 168 hours a week. We bought $800 million of Bitcoin, and a lot of it we bought over the weekend when all the conventional markets are closed. It's global. It's the most widely recognized and trusted investment asset in the world right now. It's ethical because it's the king of all commodities. There's no issuer. There's no company. There's no country controlling it. And fundamentally, it's useful. Thousands of market makers can trade it all the time. Millions of companies can trade it. Billions of people. If you want to buy a house on Saturday in Africa, this is the way to do it. If you want to buy a car on Sunday morning, this is the way to do it. So it's a pretty great asset. It's the greatest of the assets, in my opinion. There's no second best asset. So I didn't have any question about it. We're just waiting for the rest of the world to realize how good it is. As for your second question, the halving, look, the selling in the market for the past month has been primarily bankruptcy estates that are liquidating GBTC at FTX or Genesis or the like. Once they got done rebalancing, the natural sellers are the miners. The miners can only sell 900 Bitcoin a day right now. They're only going to be able to sell 450 Bitcoin a day coming the end of April. As long as there's more demand in the market than the 450 Bitcoin a day, there isn't any catalyst to drive this asset down. It has no cash flows. The critics think that's a defect. It's a feature. With no cash flows, no quarterly results, no product cycles, this is the longest lived asset in the financial ecosystem with the least uncertainty. We're buying it to hold it 100 years. So that being the case, that $66,000 to $16,000 crash, that shook out the tourists, that shook out the non-believers. When it was 16,000, we were all ready to write it to zero. And that's what you'll find with the Bitcoin maximalists. So now we're writing it the other direction, and the protocol's working to everybody's benefit. There's just no reason why it shouldn't just keep adjusting up to find the marginal supply as the demand builds.
Your market cap, Michael, is about $24 billion. You mentioned you got about $15 billion in Bitcoin on the balance sheet. So the substantial part of your market cap is now Bitcoin as opposed to your core software business. Does a software business exist solely so you can borrow off of that in order to buy Bitcoin? And how can we understand right now the health of your business as you undergo transition of customers?
Oh, trying to slam the rest of the company over at Micro, since it does seem to be a Bitcoin holding facility now.
Ourselves as a Bitcoin development company, think like a real estate development company. And certainly the substantial amount of our enterprise value is based on our unique ability to issue securities and to purchase Bitcoin with convertible debt, with equity and the like. And so we understand that. But the only reason we could make this transition is because the software business was healthy. It does generate steady cash flow. It does allow us to issue debt, to issue equity. It does make us unique because we're able to, we've got a very functional options market. We've got a very functional debt market. And we've got a very stable operating business that we can use. If you look at our last result, we actually bought a lot of Bitcoin with operating cash or cash out of the operating business. And that is purely accretive to our shareholders. So we think we're unique, and that's working very, very well right now.
Hey, Michael, do you think long term that there's any risk at this point? Has Bitcoin reached such escape velocity that there's any risk that governments, the U.S. government, Chinese government, other governments somehow do something to Bitcoin that puts its growth in jeopardy?
You know, it's another great question, Andrew. A lot of times the skeptics, they say Bitcoin looks too good to be true. It's so good to be true, someone's going to take it away from you. And that's based on a fundamental misunderstanding about Bitcoin. People refer to it as currency or digital currency, and that's unfortunate historical artifact. It's not digital currency. It's digital property. And once you make that big leap and understand it's property, you see the compelling use case is capital preservation for everyone in the world. There's no anathema associated with owning property. You can own $1 billion building in New York City. You can own every place in the world where they allow you to own property, which means China, Europe, the US, they're going to embrace Bitcoin as digital property. All the controversial issues around cryptos have to do with their use as a medium of exchange. But what I'm here to say really is medium of exchange is only worth $1 trillion. Store of value is worth $100 trillion. So I give your company, I give your family, I give your institution $1 billion. I drop you in Africa and I say, you got to save the capital for 100 years. What are you going to buy? And the answer is nothing. There is nothing on the entire continent you can buy that's better than Bitcoin. So Bitcoin's going to be embraced as property. It's going to be controversial if people think of it as a currency. So I would encourage people to think of it as digital property, $1 billion building in cyberspace.
And
hold it for 100 years.
Does it ever have to be a currency, or do you think it ever becomes a quote unquote currency?
It doesn't have to be a currency. Nobody's trying to buy a cup of coffee with a fraction of their building on Fifth Avenue. Right. But every rich person I know owns property in London or New York City or somewhere. And none of them complain about not being able to spend their building as a medium of exchange. So the killer application is capital preservation for everybody. The store of value is the killer use case. Medium of exchange is a distraction. Governments are always going to issue currency. They're always going to make it legal tender. And that's just fine. Bitcoin's competing with gold. It's going to eat it. And then it's competing with risk assets as a long-term hold. And it's competing with you buying an Airbnb as a retirement income source if you're a middle-class person.
Michael, I want to thank you for joining us this morning. Really appreciate it, and look forward to talking to you again very, very soon. Thank you.
Yeah, thanks for everything.
Yeah, this is really interesting. So to me, first of all, it's a fascinating idea. This lack of selling. Miners can only sell 200 per day because that's what's being created, going down to 450 after the halving expected in April. No earnings cycle, no companies, no people, no selling catalysts. What is interesting here is really you've got this imbalance of demand, right? Right now, there is a lot of new demand, whether it's institutionally driven by ETFs, whether it's FOMO driven by retail, whether it's just all around enthusiasm around Bitcoin. The question is, who's selling right now? And the answer is very few people. There are very few sellers. So how does Bitcoin's growth slow? Like, basically, what can stop Bitcoin? Well, you could have some form of crash in the protocol. Probably not very likely. That probably would have happened at this point. So that's unlikely. You could have some form of new, FTX kind of disaster or Binance disaster, which obviously Binance survived. That seems unlikely at this point in where we are in the cycle. And maybe that could happen again in the future, but given that ETFs are now SIPC backed, that seems to be somewhat less of an issue. I personally think, really, the way you see a slowdown in Bitcoin is, frankly, by seeing a slowdown in Bitcoin. Now, that seems stupid, but think about this for a moment. If right now it seems like Bitcoin is doing this, then the expectation is that Bitcoin is going to continue to do this, right? So let's call that current, and then let's call this the expectation. Okay, so the expectation is this, something like that. some form of continuation. So the danger is not actually, and that's just my opinion, the danger is not actually Bitcoin going down. The danger is instead Bitcoin flattening. And then when you flatten and you start having a lower year-over-year returns, right? Like your year-over-year return is maybe 1 to 2%, just as an example. Then do people at that point start selling because what they held for speculation, some people obviously on the margin are going to hold for speculation, others will hold forever for whatever, for their own purposes, whatever. But the point is, when it stops returning, then at that point you probably get an increase of selling pressure. But short of that, it's hard to find selling pressure, which ironically, it feels ironic to say the only way you can expect it to slow is that it actually slows. But that's the thing. It's like the year-over-year return has to start underperforming other risk assets. I'm going to write that down. The year-over-year return has to consistently underperform other risk assets. Right now, it outperforms, right? So that's really the only way I think you could see this sort of store of value slow down in the near term here. And that's possible. Anything that's super supply constrained I think everybody always thinks of sort of the one-sided equation. Oh, it's supply constrained. That means it must go up. Well, not necessarily, because if there's no demand for it at that level of supply, then price comes down, or at least price stabilizes, right? Once supply and demand just come into equilibrium, there are enough people saying, oh, I could get a higher return somewhere else, whatever. As soon as you get equilibrium, you actually get stable prices. And it's only when sellers start outweighing supply that you get negative demand, or you get negative price pressure, or lower price equilibria. So that'll be really interesting. I don't know how far away that point is, but that's really what would stop BTC. So right now, obviously, Bitcoin is outperforming. Yeah, I mean, this is an idea, right? There's this idea that there is less and less supply over time. Well, there's not less and less supply over time. There is less new supply over time, right? The supply of Bitcoin is not going down. The supply of Bitcoin is maxed. Like there is a maximum point of supply that you reach. So the new supply is less and less over time. But again, at some point we have to remember that yes, there are more people, but that does not mean there are necessarily more investors, right? You go from 100% return per year to 50% return, you're still going to have endless investors. The question is, what happens if at some point you're not getting 100% return anymore? Okay, well now you're going to lose those people going for moonshots, so they move to meme coins or whatever else it is, right? Now you're sitting at, let's just say, 20% returns per year. Still phenomenal, right? But now you've lost the moonshotters. Okay, cool. So what happens after that? You go to a 10% per year. Okay, well now you've got hedge funds that are like, oh, well I'll buy my Affirm debt at 15%, right? Or whatever else. And so those folks have to start taking capital that they have and taking it out potentially of Bitcoin to assign to different potential risk assets or whatever they desire to do. So I think that's very interesting. There's this argument that there is a loss of supplies in terms of like people who've lost their coins. I totally agree with you. 100%. And I actually think a lot more people are locked out than we suspect. So I don't actually think that, let's say there's 100% total potential crypto, let's call it Bitcoin. Let's call it 100%, right? Kevin's guess of like actual available, like the actual potential supply that exists, probably only about 50% of that will ever trade again, mostly due to lockouts. That's my take. So my guess is the supply is probably half of what people actually think it is, which I think actually in part is by design. You know, the Alchemist here says 40% are locked out. I think it's probably closer to 50%. You know, that I really think that's by design. It was by design that, hey, it's okay. People who don't believe in this in the early days of, 10, 15 years ago, whatever, those folks lost, so to speak, and they actually supported the future of the coin. So the more lack of believers you had at the beginning, how ironic is that? I actually want to write that down. The more, it's the greatest irony ever. Or maybe it's the greatest spiting, I'm gonna call it spiting ever, right? So think about that. It's kind of funny. The greatest spiting ever is the fewer touched and believed in the early days of Bitcoin losing access to their Bitcoin actually ended up contributing to the success, to the eventual success of Bitcoin, because they constrained supply. I think it's hilarious. I think it's very, very interesting. Actually, the drawback of Bitcoin is the supply is perfectly inelastic, so it won't take much selling pressure to cause a cascade, i.e. last week. Yeah, that is, okay, all right, so that's a little bit of a complicated argument, I think, but I like it, because what you're really saying is there, so you do have this danger. There are a lot of locked-in folks, so a sudden loss of demand, while there is some demand for selling, could lead to a larger swing, Really, it's what you're saying is this is the argument of the smaller float, right? So it's the argument of the smaller float. I think you can actually combine these two arguments. That's actually a very good point. I think you can combine the arguments. So you can combine the argument that at one point you're going to get underperforming year-over-year returns, and if you combine that with the lock-in danger of a smaller float, you could actually get substantially more price volatility. This is all very, very long-term out, and I think it's kind of like esoteric, capable of being understood for few right now. But I actually think that's a very, very good argument when we think about it and sort of verbalize it. So somebody here, House of Cards. I think I love this person's name is House of Cards, and then they say, I believe most people are simply betting gambling with Bitcoin. They do not care or understand anything about the coin other than the potential to sell for short-term profit. Yeah, that's totally possible. I think there are a lot of people who do fit that description. I don't think that downplays the long-term sort of hodler thesis. But I do think, I want to be clear, like when I say the only way Bitcoin can go down outside of like a fundamental flaw or some form of like systemic crash, Bitcoin itself, the only way it goes down is it basically becomes less desirable. Like, the sexy girl becomes a little more ordinary, and then it's like, I kind of want a different sexy girl. That's, have you ever heard the story of the Heavenly Maiden? It's like, there comes a day in every guy's life where they have to decide, do they want to always chase the Heavenly Maiden? Or stick with the ordinary maiden, because ultimately every heavenly maiden becomes ordinary. So I don't know. That's like a super fast version of that. But anyway, it's I think it's very interesting. President Trump on TikTok. That's interesting. Yeah, I mean, you really have to think about that. That lock-in argument is very good. If you get if you combine these, you actually have the way you create a price collapse potentially in Bitcoin. But that does not have to be anywhere near. That could be in 10 years from now. It could also be in many decades from now, if at all. So there's no there's no real telling that. But I do think that's very interesting. Okay, very good. So let's see what else we have. You're not thinking about the backdrop of inflation. Well, I actually don't think that you're going to have very much inflation in the long term. Remember what causes inflation. Inflation is too much demand for too little supply. I actually think for at least the near-term future, we may have killed the possibility of inflation, mostly because we over-created capacity after COVID. There were so many businesses that were so frustrated that they basically missed out on potential sales, that by creating that frustration, what you've actually done is you've said, we will not be caught without supply again. We will overproduce no matter what it takes. And I think that overproducing or at least overcapacity generation is in some regard what you might be seeing with Tesla right now. Now, of course, rates are very high, but we've certainly seen a slowing of the idea of Tesla needing to produce substantially more capacity. Right now, they need substantially more demand. Let's listen in here for a moment.
Keep pointing out Lilly and healthcare, Costco and consumer, and that sort of had a bit of a gut check, and so it's a flow issue. It's not a fundamental issue in this instance, and I think that it just raises the possibility that you'd see this little bit of an unwind of the trades that have been overplayed, and we don't know if it's going to continue. Nvidia's indicated a little bit down today, down $100 off the high on kind of massive volume, but no news, and that's always the way with
Mike. On Friday, I was looking back on my notes from a conversation with a fairly large investor. He was talking about momentum exposures off the charts.
That's right.
That's what, and we talked about this a bit on Friday. The market ahead of itself, just again looking at some of these notes. You can be a huge believer in the power of generative AI, but that doesn't change that fact. So when it comes to momentum in particular, and this name, which you could make an argument is the most important single name in the stock market right now, I don't know, does a day like yesterday have a significant impact in terms of that momentum overall?
It does, in the sense that it sort of tests exactly what's behind the momentum.
Right.
So no, it does. I think we should be clear that momentum is not just like, oh, you look at it, you know it when you see it. It's a statistical factor. It is the degree of leadership and outperformance over a period of time, and then you have people who decide if that's going to persist. You're buying the highest momentum, and you're underweighting or shorting the lowest momentum, and that's why we've had the divergence within Magnificent Seven. Right? You've managed to have Apple and Alphabet are anti-momentum right now, and they've suffered, because of it. So it's not going to be the whole story of the market this year, I think, but it does kind of touch a raw nerve, which is just exactly how aggressive are people going to be in discounting the same really good long-term secular growth story every day through higher prices.
Yeah, we're obviously on watch next week for GTC, Jensen Huang's keynote on the 18th. At the same time, Mike, we end up with journal headlines like the one today. Stronger U.S. growth prompting investors to scoop up a broader set of stocks. And we talked about the Goldman desk note last week about industrials and healthcare year to date.
This is the kind of silver lining piece of it, or what we've been waiting for, which is markets really absorbing. Friday it did too. I mean, Friday looked like we were going to have a substantial down day on the indexes. I think you ended up down 2/3%, as opposed to 1.2 or whatever at the lows, because everything else picked up. Now, part of that is just a reversal of what's been happening. So the weaker stuff, the laggards rally. But yes, you've had new highs in the equal-weighted S&P. You have new highs in the mid-cap index. So it has become more inclusive. It should happen that the earnings growth picture should broaden out, and that's what the market seems to be trying to look ahead toward. So it's not all about just 7 stocks, but it is an unbalanced market in the sense of where the real buying aggression.
Yeah, well, it's also worth noting we have seen a broadening of the S&P 500 as well. The S&P 500 has been up 16 of the last 19 weeks. We haven't seen that kind of green since 1964. So, I mean, this is a really big deal. This is a lot of green at a one time. And it's wonderful. It's been a wonderful ride for those exposed. specifically to the S&P 500, NASDAQ, or just these broader stocks that have outperformed, certainly like the Nvidia trade or otherwise. But there are a lot of folks who say, is this supported? And really, it kind of has been by better earnings. Earnings have been very good at a lot of with a lot of companies beating, and that creates even more enthusiasm. So we shall see, I suppose. How long can it go on? Well, possibly long, but we shall see. Again, you don't want to see a kind of unemployment recession, but we really haven't seen that. I mean, even if we jump on over, let's take a look this morning of layoffs, just sort of tech layoffs over time. I always like to look at the layoff chart. Yeah, this gives you kind of March, and you can compare that to last year. We were at layoffs at 38,000. We're a third of the week in already. So you would, like, we don't even have layoffs reported. Or a third of the month in already, right? And we're at 15 companies reporting layoffs. We were at 127 before. So that puts us at a rate of about 45 right now relative to then. We're at 35% of the layoffs. We're at a third of the layoffs, spreading out what we should have for the whole month. And that's pretty remarkable. It's not that many layoffs. So you're not getting pain in the unemployment sector, and you're not seeing pain in the risk sector because, well, risk sector goes up as prices go up, right? And the reverse happens when we get into these risk-off periods like 2022. Everything just keeps going down, feeds on itself. Anyway, look at this. You got a price target here on Nvidia to $1,200. Let's see what they say.
Over the next 5 years, that gives you confidence.
I know laying people off is lagging. Relax. That's why we try to use warn notices. You got to be careful just hanging your hat on like, they can't use jobs data because it's lagging. No shit. Like when you go into a recession, people are going to get laid off a lot more. But you look at warn notices. I actually think we put that up on eHack. Let's go to eHack.com. Warn notices. Yeah, here we go. So this is the warn tracker. This is why I made everything one giant page on eHack.com so I could. Frankly, I did it for myself. I just quickly threw in I just figure you could use the search functionality in your browser. And then just type in like warn notices. Oh, how convenient. Look at this. I have it March to March. And total warn notices, either stable or trending down. So, it's interesting. Somebody says I don't like the colors. Well, then turn on reader mode. Like have you ever looked at it on reader mode? It's an option. Let's see here. If I go to eHack.com on the iPad, let's try it, okay? So we go to eHack.com on the iPad, all right? And you're like, I don't like the colors. It's not pleasant on my eyes. Okay. Then press the little AA button here, show reader. There you go. And then you could have like a dark mode. How cool is that? And it's like the endless scroll, right? So, and then I could even, let me see if I can pull this off. If I just go warn, I think I can. Notice. Can I do this? Warn notices? Oh, the iPad search. Oh, there we go. Does it work? Warn notices. Ah ha ha! Look at that. It works. Yeah, see? Look at that. Look at that. There you go. See, look how simple. You press a button and it's solved. Solution for everything. So, okay. All right, so let's continue to. You could use reader mode to skip subscription articles. Oh, I'm old. It's okay. I still love you. Dark mode is beast mode. Yeah, yeah. Where is it? But you need more BTC content. Yeah, this is what I was looking for. Chiba here says you can use reader mode to skip subscription articles. That's kind of brilliant. I have so many news subscriptions that I finally stopped buying more news subscriptions because I'm tired of this. I can't keep spending money on all these news subscriptions because I can't track them all. Like, the one time a year I have to log into SAC-B. It's like, am I really going to pay for a year for one article? Oh. Anyway, let's keep listening in here for a moment.
What is next for the group? If I take a step back, we're still only 3 to 4 quarters into this cyclical upturn. Average cycle's 9. So, I think you're safe to own the group all year. I still think AI is your best exposure. We do like front-end semi-equipment as the arms deal.
Boy, this guy needs some AI on his camera. I'm sorry, I shouldn't say that.
We don't think we get to, the prior cyclical highs. So
it's because he's like in a super dark room, is my guess.
Edge AI is probably a place, to spend time. And
dude, is he like on the Vision Pro or something?
a greater focus.
CJ, appreciate that. That's helpful. Hopefully we'll talk, if not before GTC, then on the other side. Thanks.
Yeah, I do have to say, I think it's a little risky to say that, oh, the position to be is AI, because there have been so many quarters of rallies historically that, until we get to that point, you shouldn't sell. I don't know, man. I don't know. I think it wouldn't surprise me at all to see a giant ass pullback. Sorry, in the semi space, like giant, because I think we've pulled forward a lot. Now, I'm not calling for like recession. I'm not saying these sectors are dead. I actually really like AI and I like the sectors. I've got exposure, a good amount of exposure to them myself. This isn't about me. This isn't about sort of what I think, matters for my own portfolio composition. I actually think a great thing is the tax loss harvesting thing we talked about with Tesla. But no, outside of that, I actually am a believer in AI, but not some of these valuations. Some of the valuations just blow my mind. But then again, I'm sure, you could talk valuation all you want, and then, before you know it, you just miss the boat all the time. So there's always a risk of that. Anyway, a little bit of a pull down here in pre-market. Tesla's trying to go red. The Qs are trying to go green. ARM's down 3%. I'm still short that sucker. You've got NVIDIA down about 62 basis points. I don't know why, but after this long weekend, I'm really excited to see what happens at the open this morning. I think there'll be some serious, entertainment guaranteed when it comes to the market open, so we'll see. Ensign Ricky. Do you work at Ensign? Isn't that a company? Ensign. I don't know what ensign is. A flag or a standard? A commissioned officer? Anyway. We've lost over 1.5 million full-time jobs since December. Have you been to the border? Okay, I'm sorry. I didn't mean to say that. Hours worked are also down to 34.1 a week. Employment went up 0.5% in the last 10 months. Household survey is in the gutter. How is that good at all? No, you're right. I'm not saying it's good. It's not perfect. You're totally right. Like there's a sort of this. There are these consolidations of industries that are hiring. Healthcare, AI, and the government. But what's crazy is you're getting that service. Like at the last employment reports, are showing that service employment coming back. But you are right. Like there are cracks, and the question is, will the Federal Reserve recognize these cracks, or do they stay tight forever? Basically. I was thinking about that yesterday, and I put myself to sleep reading the Beige Book. Let's just say it didn't take very long. I think I got through the overall economic activity paragraph, and I fell asleep. Economic activity increased slightly on balance since early January, with 8 districts reporting slight to moderate growth in activity, 3 reporting no change, and 1 district noting slight softening. Consumer spending, particularly on retail goods, inched down in weeks. Several reports cited heightened price sensitivity by consumers. Activity in leisure and hospitality varied by district. Air travel robust. Demand for restaurants, hotels, and other establishments softened due to elevated prices. Well, that's interesting. We're seeing, it seemed like that there was still hiring going on there. Little impact due to Red Sea and Panama Canal. Blah. Labor markets. Employment rose at a slight to modest pace in most districts. Overall, labor market tightness eased further, with nearly all districts highlighting some improvement in labor availability and employee retention. Well, there you go, to your point. Businesses generally found it easier to fill open positions and find qualified applicants, though difficulties persisted attracting workers for highly skilled positions, including healthcare professionals, engineers, and skilled trade specialists such as welders and mechanics. Wages grew further across districts. I mean, like that, it just, none of that really sounds horribly recessionary, so it's kind of like, where's the black swan? I don't know. One day will come. Let's listen in here.
It picked up a good deal of momentum. We talked on Friday about this at some length as well, in part because TikTok's actual effort to raise awareness amongst its community and have them contact their Congress people seems to have backfired in a way. We'll see if and when it gets passed, or when it gets to the Senate, what things look like. The president has indicated that if, in fact, he is presented with a bill to ban TikTok in the U.S., he will sign it. Of course, then it brings us back, or brings me back, certainly, to the reporting that I did some, I guess, 3+ years ago, 3.5 years ago, when there were any number of at least potential offers for TikTok in the U.S. Remember, Walmart sort of was in there briefly, Oracle, which conceivably would have hosted the servers, Microsoft. None of them happened, and the whole effort fell apart, so to speak, or at least just momentum died. But here we are again. And then the question becomes ByteDance, the parent company, its key owners. It's been one of the greatest investments of all time for those who owned it from when it began back in, let's call it 2012, I believe it was, something along those lines, including Susquehanna, which we pointed out on Friday, which owns as much as 15% of ByteDance. Jeff Yaz, that's the gentleman that Trump was referring to, one of the owners. You can see Arthur Danchik from Susquehanna is a board member, along with the likes of Cotu's Philippe Lafont, and Bill Ford from GA. Mike, trying to understand exactly how it would work, again, becomes very complex.
Yeah.
Do you have to rebuild the algorithm in the United States? Does that go along with it? I remember having done a lot of reporting on this previously, and I've got to revisit some of it. There's some reports that Bobby Kotick, the former CEO, of course, of Activision.
All right, this is boring. Okay, whatever. So let's see if we can see some more movements here in the pre-market. Nvidia's down about 80 basis points. Tesla's barely trying to stay green here at 6 basis points. Apple's actually up. Apple's been so left behind. I think the Apple car kind of was sort of adding insult to injury, that they not only kind of haven't been part of the AI revolution, but when they burned the Apple car, they kind of suggested that, like, yeah, what we were paying attention to was a failure, and we haven't been part of AI, so oops, sorry. I don't think that does really well for Apple as for its long-term investors, though I don't think you can bet against this company. Bloomberg ran a piece just the other day where they suggested that Apple failed at the Apple car partly because of bad leadership, corporate indecision, tech challenges, manufacturing challenges, as well as disagreements over the interior, whether to produce the car at all, what level of autonomy to use. There was just a lot of ranting, apparently, that was going on. So, who knows? Let's see here. Let's see if we can find some goody news here around the board on from the suits. So we'll see what the suits are saying. First, let me get the 5-year break even quickly as well before we go into the opening here. About 11 minutes to go. We'll do a quick check of bonds. Futures red across the board, 36 basis points Dow, 33 SPY, 46 NASDAQ. Bonds sitting at about 4.08. With the 5-year break-even inflation rate down a bit to about 2.39, obviously CPI is about to swing that dramatically. And the 2s, 10s curve, China is, by the way, worried about going into a state of an inverted yield curve here soon. 2s, 10s inverted about 43 basis points. So definitely still sitting inverted. Okay, let's see what suits have for us this morning. I think this Tyson Foods article was very interesting as well, about immigrants taking those jobs, especially asylum seekers. Let's see. Talk about gold still being below potential by some gold buffs here, but then again, I feel like that's always said. Then we're almost at 3,200 for gold. You've got, no, actually very little here from the suits. Okay, let's try a different source. So how about JPM? Flat futures, tomorrow's CPI, non-farm payroll was initially bullish before a strong reversal, including a 10% reversal for NVIDIA. That is kind of wild, seeing a 10%, like intraday, that 10%. And I can't understate how wild it was that we might not see this again for a long period of time. But I want you to see something. Yeah, there's the Reddit IPO trying to raise $750 million. That's true. I want you to see this. This is wild. So let's go to the 30-minute chart. That's not going to do it justice, is it? Can I go to the 5-minute? Yeah, I can do the 5-minute chart. So I want you to see this. Look at when the 5-minute period was that we hit peak here. We hit peak March 8th at about 10:30 to 10:35, right? We got rejected and NVIDIA collapses like 10%, okay? Go to BTC, 30-minute chart. We have to get to the 8th, which is a little further back since it's open on the weekends, right? 10:30 chart. Look at that. You in the 10:30 chart, between 10:30 and 10:35-ish, basically, if I were to zoom in here a little bit more, you hit your peak, and you collapse at the same time. Let me go to the 5-minute chart, because it'll do it better justice. Because I want you to see, it basically at the same moment, which somewhat implies it's really institutionally and algorithmically controlled. There it is. See? Right here, between 10:30 and 10:35, it was virtually the same exact minute that you got this NVIDIA Bitcoin simultaneous dumpage. It was really wild, if you think about that. The local Tyson plant near me, type plant near me, always hires illegals when possible. Pay is much lower, and they don't pay medical for them. Well, at least they get a job, I suppose, eh? Unprofitable business with the greedy. Yeah, well, there's that argument as well. I mean, I just think they need to fix the immigration system. Like, if you just had smooth legal immigration where, like, it took you, like, just imagine for a moment, and I'll get off this, but imagine for a moment you would get approved to be an immigrant, your background is cleared, and you get placed at a location that could support you or whatever within 90 days. So, like, let me give you an example. If somebody came to me and said, hey, you know, I'm an Argentinian, Kevin, I want to work for your company. And I'm like, cool. We'll put you in one of the apartment buildings we own. You could work here. This is your pay. We'll get you started on this. We'll get you on payroll right away. Put in your application. Boom, 90 days they're there. Oh, that would be beautiful. Like, the system would actually be functional then. And then somebody can actually integrate with society by letting capitalists help the people integrate. Rather than right now, it's like, you know, the government punishes you for trying to hire immigrants. It's crazy. So, but anyway. Yeah, somebody here says the Federal Reserve has no intent on stopping devaluing purchasing power. Well, yeah, I mean, there's no doubt about that. That's why you should always be out of cash. I mean, obviously you could be in like money markets and stuff like that where you're yielding 5% and your real return's probably 2-3%. That's great. But yeah, the cash itself will always lose value. Not to mention multiple revisions to the downside of the establishment. That is true. Yeah, but even when you factor those revisions in, you're still like at or above trend. It's crazy. So, all right, let's see. Do you think the halving is going to make the price of Bitcoin go up? You know, historically, the price of Bitcoin has always gone up. So the problem is the history of Bitcoin is very short. All right, you're talking what, less than 15 years here. So if you look at every halving and you zoom out enough, it's always gone up. So that doesn't mean it always will. But I mean, just look at the month chart for Bitcoin. You know, Webull doesn't even go back all the way. Like, I mean, even though it's volatile, you can't say it hasn't always gone up. You know? So kind of crazy. Let's see here. All right, so what else? I think some of the NVIDIA dump was related to in-the-money options. They wanted worthless. Triple witching this Friday. What I was thinking about is, like, imagine if you had $1 billion, okay? Right now you had $1 billion in your bank account. You realize how much you can manipulate a stock? I mean, think about what you could do. Imagine this, okay? You have $1 billion. And then all you have to do is you go into like Owlet, which is like down 9% this morning in pre-market. Go buy a bunch of options. The problem is you might not get options on some of these. Okay, fine. You need to get like a smaller company. Like a company that's not, a company that has an arguable thesis. So like, can I do this? No, not really. I need market. Why is market cap not on here? Oh, there it is. Okay. So you go to these smaller market cap companies. Like, go to like a Lemonade, okay? You come up with some Reddit thesis. Look at like some, I don't know, 39 days. How much open interest do we have on these? Very little. But so let's just say, for example, you bought like $19 calls, okay? We've got some open interest here. So you got $1 billion in your bank account. This company literally is like a $1.2 billion company. So obviously the float is a fraction of this. So you go in here and you buy a ton of calls for the 19th. And then what do? You put out some thesis on Reddit about how it's the next big thing. And then you start buying 25 million, 25 million, 25 million. And every single day, this sucker's up 10%, 10%, 10%. And then all of a sudden, people are like, oh my gosh, this Reddit thesis is right. And then other people start buying. Now it's up 20%, 20%, 20%. And you're like, bro, my call options are printing. Then you go big. You throw in 50 million, 50 million. And the sucker goes up 30%, 30%. And then other people are piling in. Now you stop buying, and instead you you cover your calls, which are up massively, and then you start selling. You slowly start putting more supply out there as the FOMO has self-sustained, so you could get your 150 mil back out or whatever, and you just made a crap load of money purely manipulating a stock. It is entirely possible. It happens all the freaking time. Kind of crazy, but it's fascinating, feels wrong, probably happens way more than we think it does. So, like that's, I always try to think, like, what would you do if you had $1 billion? And A, you might retire, but then you get bored, right? So think about it. If you're like Kenny G, I'm not saying he does this, but like if you had trading teams doing this, is it illegal? Is it illegal to post your thesis on Reddit, to buy call options, to buy a crap load of the stock because you have a lot of money? Is any of that illegal? No, none of that's illegal. Okay? And then when it runs up, and then you're like, well, I guess it hit my price target. I guess I should start selling. Is any of that illegal? No, none of that is illegal. So of course there's rigging like that goes on because it's not illegal. It's the game. It'd be illegal if it was like a pump and dump where it's like, this idea of, I mean, I guess that basically is what it is. I mean, it kind of is a pump. But what differentiates it from a pump and dump? That's very interesting. Because if you just make the argument that, well, it hit my price target, is it a pump and dump if you sold at the top? Like, then it dumped after you dumped. So it's kind of like a pump, sell at top, then the market dumps. I don't know if that's illegal. I don't know.
The future of money or anything like that.
Right. We'll continue that conversation in a minute. Let's get the opening bell here in the CNBC Real-Time Exchange. And the big board, it's Ireland Inc. supporting Irish investment in the United States. At the NASDAQ, it's Invesco celebrating the 25th anniversary of the Invesco QQQ ETF. Some discussion this morning about how...
I love the bell. All right, so what do we have? I'm kind of excited to see this. Tesla's red 13 basis points. NVIDIA, NVIDIA is trying to go green. Look at that, a green candlestick, down about 40 basis points right now. Bitcoin holding up at 72.2. Doesn't look like you're actually getting movement there at all with the bell. NVIDIA is about to go green. Go, NVIDIA! Oh, it's green.
The lead.
It is bobbing, though, a lot. Look at that volatility. ARM is down about 4%. And those lockups, by the way, start tomorrow. The lockups tomorrow for ARM. So they could start dumping tomorrow. That's crazy. Coinbase, big red candlesticks there at the open. You've got Apple trying to go green candlesticking. Palantir at 26 bucks trying to push green. Enphase trying to push green with a percent. Yeah, let's see if we got bigger movers here. Tesla is trying to go green. It's having some trouble. It's really getting rejected here at 175.60. I don't know. It's not good to get rejected by that number because I think you're going to have a pretty nasty deliveries miss coming up here. Troy Teslike, I actually invited him on because I wanted to talk to him. He's a pretty private person, though, so I don't think he's ever done an interview. So, but he seems like a really, really solid, nice person. But anyway, posted some more numbers. He's not too excited about deliveries there for Q1. He's down to about 410 now, 410,000, which puts you negative. But look at this buying pressure that's coming in here at the morning. You're now up about 1% on Tesla. Did outlet's flat? Okay, interesting. I thought it got halted there. NVIDIA just turned negative. That was bizarre. Okay, we just went from a positive inflow to all of a sudden negative 2.4%. Tesla, it's almost like people might be wanting to try to move from NVIDIA to Tesla. That's possible. You could take some gains and move into something else, but I don't know how robust that's going to be if NVIDIA is tanking like this. NVIDIA is tanking, Coinbase is tanking. You've got QQQ that's tanking, ARM that's tanking 5%. That's some big tank in there. People are moving money to Apple maybe as a risk play, honestly. That might be what's going on. That's very interesting. Somebody here says, Wall Street analysts follow Troy. There's no way the stock doesn't reflect Troy's estimate. You'd be surprised because there's a lag time, right? Like, they have to remember, oh, that's right, I need to go check on the Tesla numbers, right? And then they might look at a Troy or whatever. And then what happens is then you have to update your targets. And so there is a lag between when maybe data's available and when I think maybe you might give Wall Street a little too much credit there for being too fast on some of the analyst numbers. Don't get me wrong, I think like high frequency traders and stuff are fast, but yeah. So let's go to NEO. Tesla's still at 1%. NEO here. Oh, NEO 4.3%. I want to see if there's any particular NEO news or if this is just bouncing off a bottom here. That might be what's going on. That's not uncommon. So individual company news. Nope. Is BABA moving today? Sometimes the Chinese enthusiasm moves BABA. BABA's up about 2.3. Tesla's still up about 1.2. Tesla's really trying to move here. You've got NVIDIA down, though, down to about 2.9. ARM down about 4.3. Looks like it's trying to recover. Let's see what they're saying here for a moment.
I have wondered, we've discussed why not more IPOs, given there is at least a similarity between this period and the late 90s in terms of the excitement about the internet. But back then, of course, we had companies coming public endlessly, most of them with underlying business models that made absolutely no sense in terms of getting the cash flow positive.
Yeah, back then you could sort of be a website or software company that operated in this very sort of small part of the food chain, and you could blow that up into being a plausible enough business model for an IPO. Yeah, we're not seeing that. A lot of things don't quite line up in terms of seeing the level of broad scale frenzy. You don't see a lot of margin debt. You don't see a lot of the IPOs. You do see a lot of concentration in the biggest names, and that was something we saw, leading up to the 2000s. Also, this momentum trade. I did see a chart. 314 Research had this. The percentage of S&P market cap in the 100 highest momentum stocks is about 50% recently, and that's that's almost as high as it gets, right? So in other words, the market has been leaning so heavily into the stuff that's been working best that that's why maybe we've set the groundwork for just a little bit of a hiccup here.
Morgan Stanley today does reiterate their view that global M&A volume will rise 50% this year. They talk about mentions of M&A on corporate transcripts, highest over the last 2 quarters. This was a call that was made a couple of weeks ago, but refreshing it today. We'll see. They talk about better confidence and maybe some easing regulation.
Confidence is a very important component of the M&A market, as we have said many times for many years, Carl. But
boring. All right, so let's take a look at this. JP Morgan, where's the overvaluation? Not in the Magnificent Seven, at least not relatively. Cyclicals, though, appear stretched. We favor growth over value style this year. Okay, interesting. Growth over value. Yeah, well, that makes sense. We favored growth over value this year. And again, so far year to date. Let's see here. This is JPM. Magnificent Seven stocks appear cheaper at present versus the rest of the market on where they've been trading in the last 5 years. Obviously, like looking at the charts, that might be disappointing. Admittedly, in absolute terms, there appears to be an excess. Right, exactly. And Mag 7 stocks could start seeing earnings disappoint as well. Yes. Well, there's always this idea that the biggest companies always take the biggest gains, right? It makes a lot of sense. Mike Wilson did post a piece. Mike Wilson, fundamental backdrop remains ambiguous. Oh, let's take a look at the Mike Wilson piece together. I always like seeing the bear arguments. ARM, by the way, just went from. Oh, that was crazy timing. ARM just went. Got some green candlesticks there. It's negative about 3% right now. And NVIDIA is trying to recover as well. NVIDIA was down about 3% there. It's only down about 1% right now. Does look like you're getting kind of a rally mode day here leading into CPI. I'm surprised by that. Usually going into CPI, you don't get sort of a rally mode. But who knows? Maybe somebody just leaked some data here about 5 minutes into the open, right? So let's see here. You've got MicroStrategy also push in. I don't think we got any real movement there on BTC. BTC USD. Let's see what we got. Yeah, no, BTC just continuing. Really continuing to push here. Let's see here. You've got 72.3. Tesla now at 2%. So definitely gained the lead. Coming out of that open there, at the open there, it definitely came down. And I said, should we short MicroStrategy? Well, if you short that, you're basically shorting Bitcoin, right? And as they say, the market can remain irrational longer than you can remain solvent. Shorting is a quick way to go BK sometimes, so be careful. Anyway, Tesla continues to pump here. In the meantime, let's jump in over here. I want to take a look at this. Historic rally since October has been driven largely by higher valuations rather than improving earnings, says Mike Wilson. Multiple expansion has accounted for about 90% of the move. We attribute the equity rally to easing financial conditions, a rise in liquidity, and continued fiscal support. Liquidity has gone on. Financial conditions have loosened. That is true. Corporates have been increasingly focused on AI adoption and operational efficiency. Let's see here. The market has been rewarding factors related to operational efficiency, which likely contributes to this focus. Fair. Leveraging AI to drive efficiency. Yeah. Okay. Consumer services, healthcare, financial services, software services. These groups represent just 30% of the expected net income of the S&P 500. The return of mergers and acquisition. That's kind of like what we saw CNBC touching on this morning. Look at this. Still getting that rally pushing over here on Tesla right before CPI day. And NVIDIA really trying to come back. It's trying to go green today. So ARM is still bobbing around that plus or minus, it's about negative 3%. You've got Apple 1.5. Palantir up another 2.8 today. Very nice. Enphase 2.3 today. Where are the biggest movers of the day? Let's see here. Biggest movers of the day. Volatility. Yeah, directional change. That makes sense. Coinbase up 4. Lemonade 2.2. Palantir 2.4. Tesla's there at 2.6. Enphase 2.0. So it does look like some enthusiasm pre-CPI. Again, surprising to me, seeing that pre-CPI. Unless somebody leaked the numbers. Super microcomputers down about 6%, but then again, relative to where it's been, it's not really a big deal. Okay, chase to catch upside in stocks is the new crash protection. The S&P 500 breaking record after record. The premium of puts over calls on 2-month options has tumbled to an all-time low. Wow, when adjusted for volatility. This led the bank's derivative, which bank? Oh, UBS. This led UBS's derivative strategists to recommend positioning for further upside as their most preferred hedging strategy. Hedging to the upside. Yes. Yes, folks, an upside hedge. That is basically when you just load up on call options because you're like, we need to be part of more returns. This is not enough. Not enough. Yeah, how does it happen? I mean, yeah, you could Google that, but really, I mean, what you're doing is you're just rewarding block creation at a lower premium. So the miners earn half as much. I think they're going down to what, 3.125 is it? I think it's 3.125. I'll have to double check on the decimal there. But you just get rewarded for mining a Bitcoin and at a lower rate. Or a block, right? A block pays out less, and then everybody gets the sort of proportional. But anyway, that's an oversimplification. A little bit of, oh, look at that pull down there all of a sudden in BTC. 71.8. All of a sudden, a little bit of a drawdown there. And I don't know what it is with NVIDIA and BTC. They seem to move together. Keep in mind, we're on the average candlesticks on NVIDIA. So if I go to the normal candlesticks, yeah, you see a little bit more of a drawdown there, where you're not seeing that on Tesla yet. You are seeing that on NVIDIA. And I don't think I have the average here. Do we? Oh, no, we are on the average. These are the average. So if I go to the unaveraged, I see a little bit more of that pushing down. Yeah, as it's trending down right now. And I'll keep an eye on that. Okay. What else? So interesting on the upside hedge. Okay, what else? More coffee is what else. That's what we need. All right. Biden. Oh, Biden warns Israel not to invade Rafah. Jeez. Let's see here. Softer, but not enough for the Fed to cut yet. Okay. Yeah, the $748 million money raised there for Reddit. It's a big IPO. Reddit holders are planning to sell 22 million shares between $31 to $34 each. About $15.3 million of those shares will be sold by the company and rest by investors and Reddit employees. It says who are Reddit employees. Key. 10 last year, let's see here. Reddit raised funds in 2021, valuing at $10 billion. What were they trying to IPO now for now? Let's find out. Reddit IPO billion dollars, $6.4 billion. Ah, wow. 36% haircut from 2021. But then again, everything in that sort of tech world got hit pretty hard. But then, you're seeing a lot of new all-time highs. So, ARM still down about 3.6. Meta. How the heck is Meta down 4? When does Facebook go down 4%? Oh, well, yeah, Derek, for sure. There's the likelihood of the halving already being priced in. Absolutely. But there's this continuous inflow because of institutional allocation that it doesn't even really care about what's fundamentally happening. Yeah. But why is Facebook down 4%? Oh, Meta. Meta, my Meta. What have you? Meta. Let's see. Trump banning TikTok would make Facebook bigger. Oh, Trump bagging on Facebook. And he doesn't like Facebook. Right. Okay. All right. Ay. It's amazing. I wonder how DWAC's doing. Ooh, Tesla's almost up 3%. DWAC, 39 bucks. Go out to the week chart. Well, that's interesting. This is buy the rumor, sell the news, right? Look at that. This candlestick right here, Super Tuesday. Basically, this is the beginning of Super Tuesday right here. Just run up to Super Tuesday and then sell. Wow. Ooh, Tesla, 3% day. Look at that. Neo 5, Nvidia, Qs. Very interesting. All right. So I think it's time to press the button and run on over to the Course Member Live after I get another cup of coffee here. So thank you so much for being here. As always, make sure to check out the event that we have June 21 to 23. If you haven't seen yet who the speaker announcement is, go check it out. The speaker announcement is live. Just go to meetkevin.com. You'll see it for who's going to be there to talk real estate with us. It's going to be really fun. So we've got more speaker announcements coming up, and as we announce more speakers, the price will be going up for that June 21 to 23 Vegas event. We'll see you there. Thanks so much for watching. Thanks so much. Bye. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. There you have it. We'll see you soon. Time to post the Course Member live stream. See you soon, folks. Bye.